Welcome to XFO Intelligence Podcast. I'm your host, and today we're diving deep into a groundbreaking analysis by Brendon Wong, founder of XFO Intelligence and former Deputy Global Head of Family Office Team at InvestHK, that's Invest Hong Kong. Brendon was instrumental in drafting and launching Hong Kong's new capital investment Entrant scheme back in March 2024. Today's episode focuses on his latest report, Hong Kong's Great Reinvention, how the 2025 capital batch forges a new economic destiny, published just today, November 5, 2025. Before we begin, let me provide some crucial context. Each CIES application requires a mandatory investment of HK$ 3 million into a portfolio managed by HKIC. However, as of today, this portfolio has not yet launched, meaning applicants' funds are currently held in cash. This makes Brendon's analysis of the upcoming 2025 capital batch particularly timely and significant. Brendon describes what he calls one of the most sophisticated financial ecosystem transformations ever attempted. At its core, the 2025 capital batch represents far more than a simple investment fund. It's a strategic initiative that could reshape Hong Kong's entire economic landscape. Let's start with the architecture. The Hong Kong Investment Corporation Limited has designed a framework that aggregates capital from individual investment entrants into a substantial pool exceeding HK$ 2 billion. This isn't just about collecting money. It's about strategic allocation. The funds will be distributed among 8 to 10 carefully selected asset managers, each receiving a minimum mandate of HK$ 200 million. What makes this particularly interesting is the 7-year investment horizon. As Brendon notes, this demonstrates a commitment to patient capital, recognizing that genuine innovation requires time to mature. This timeline allows managers to support portfolio companies through critical development phases without the pressure for premature exits that often plague traditional investment models. But here's where it gets really fascinating, and this is where Brendon's background in family office strategy really shines through. The initiative has an unwavering commitment to cultivating local talent. The selection criteria deliberately prioritize Hong Kong-based asset managers with deep roots in the city. Key decision-makers and the majority of employees must be based in Hong Kong, while mandatory Securities and Futures Commission licensing maintains professional rigor. Brendon calls this a strategic masterstroke in human capital development. By anchoring asset management expertise within its borders, Hong Kong is building the intellectual infrastructure necessary to compete in the 21st century knowledge economy. Now let's talk about what this means for family offices, which is really Brendon's area of expertise from his time at InvestHK. He describes this as nothing short of a renaissance catalyst for Hong Kong's family offices. The benefits cascade through multiple dimensions. First, there's access to vetted, innovative deal flow. Family offices gain access to a pre-screened pipeline of investment opportunities in strategic sectors. The requirement that managers invest in at least 2 innovative themes creates natural investment clusters in areas like fintech, green technology, and healthcare innovation. Second, there's talent ecosystem development. The initiative's focus on nurturing homegrown asset managers directly expands Hong Kong's pool of investment talent. For family offices, this translates into more choices for outsourcing investment functions and easier recruitment of professionals. Third, there's risk mitigation and strategic alignment. The implicit validation from HKIC's selection process significantly de-risks the initial screening process for family offices considering co-investments. This is particularly valuable in early-stage investing, where information asymmetry can be a significant barrier. Brendon identifies what he calls the ecosystem multiplier effect. The true power of the 2025 capital batch lies in its potential to create self-reinforcing economic dynamics. He outlines 3 key loops: the performance concentration loop, the network effect of innovation, and the wealth creation cycle. But let's be realistic about the challenges. Brendon doesn't shy away from these. The finite pool of qualified local asset managers represents a genuine challenge. There's also the need to balance strategic impact against financial returns, requiring sophisticated measurement frameworks. His analysis reveals several critical success factors. For optimal manager selection, he recommends a balanced scorecard weighting local commitment at 30%, track record at 25%, strategic alignment at 20%, fee structure at 15%, and risk management at 10%. He also identifies strategic intervention points. Early-stage portfolio rebalancing between months 6 and 18 proves crucial, and there's a critical valley of death that emerges between early-stage validation and growth-scale funding, particularly during months 24 to 36. Looking at global implications, Brendon sees Hong Kong's approach as offering a blueprint for financial centers seeking to harness strategic investment for long-term prosperity. For global family offices considering Hong Kong as a base, the 2025 capital batch sends a powerful signal about the jurisdiction's systematic thinking about its economic future. In his conclusion, Brendon makes a profound observation. The initiative's greatest innovation may be its recognition that financial markets are living ecosystems rather than mechanical systems. The most successful outcomes occur when the system is nurtured holistically. For family offices, this initiative provides what he calls the scaffolding, upon which they can build more sophisticated, strategic, and successful investment programs for generations to come. As Brendon puts it, in the final analysis, the 2025 capital batch is more than a policy. It's a statement of intent. Hong Kong's future as a financial center will be built not merely on facilitating transactions, but on generating fundamental value through innovation, talent development, and strategic foresight. Before we wrap up, I want to emphasize the important disclaimer that accompanies this analysis. This is independent analytical commentary and not an official document of HKIC or the HKSAR government. All interpretations and recommendations are Brendon's independent views. That's all for today's episode of XFO Intelligence Podcast. This analysis provides crucial insights for family offices and institutional investors watching Hong Kong's evolution. The 2025 capital batch represents a pivotal moment in the city's financial ecosystem transformation.